surprise there, and no changes to the statement either. Markets were perhaps expecting a bit more dovishness than actually came out. So that isn't actually the case. Let's just put me up here for now. We'll get to the charts in a minute. Euros hardly moved, to be honest. We went to 121.87 down to 121.70, so a bit of an 18 pip hiccup in the first 5 minutes, but we're sort of drifting a bit lower again at 121.70 at the moment. So Mr. Lagarde's up in a few minutes. She's up at the bottom of the hour. And 45 minutes ago, the statement came out, and to say markets priced that in. Euro really in a range, a bit like cable, not as clear as the range for cable, but euro dollar not really going very far at all on that announcement. 121.70 is where we trade at the moment. Let's bring any chats up. There we go. Big news in a few minutes is the weekly claims. Remember, it's all about, as I wrote yesterday in the on the podcast, and I wrote in the little note that we put out on our website. It's all about jobs, inflation, unemployment. Is that keeping pushing forward? Is it starting to slip? Obviously, we had that miss, nearly 100,000 miss for NFP last Friday. The weekly claims keep beating expectations, and they've been trending lower. Just like a few months ago, we were saying they kept missing expectations and they kept ticking up. The big thing over the last couple of weeks has been the continuing claims. They've excuse the pun. They've continued to remain in an upward trend. So let's see if they roll over to the downside today. So we're expecting about 370,000 for the new claims in a couple of minutes, and the continuing claims, the 4-week average at 428,000, and the continuing claims. It's actually not on here. This sheet here, around about the 4.8 million. So again, see what comes of that. Obviously, the main thing that's been driving things for the last week or so is this CPI number as well. It's going to come across the boards at the same time. Expectations of the monthly number for May ticking up to 0.4%, and that would make the year-on-year number pushing to 4.8%, over twice the rate that the Fed want to get it at. But the Fed are very, very calm about it all. I'm sure you all aware. Just saying this is transitory. The big thing the markets have got. What do we mean by transitory? How long is transitory? At the moment, the Fed are talking about not looking to have to move rates until 2023, possibly even later. Some market participants are now talking about a Fed rate rise possibly as early as December 2022. It's only a 9% chance, but it's there in the marketplace. So claims key as normal every week, but really the big news this today has been the CPI. Markets can tend to get ahead of themselves, over expectations. So we'll see what this number is. And the other key thing about the CPI is it's just that it's consumer price inflation. It's not the PCE number that the Fed are more interested in. So Euro's dipping down here has started picking up as the numbers have come across the range. So for the first week in 4 weeks, the initial claims are actually worse than expected, 376,000, but still the trend remains very much down. It's below 400,000. And it's only 6,000 out of kilter, so it's still below last week's number. The 4-weekly average is trending lower again, so that's down again, another 20,000 down to 402,000. But the big news that's just come across the screen is that consumer price inflation year on year for May has hit 5%. That was in the parameters of possibilities. Transport. So the key one, the one we're really looking at, is core, and that's coming at 3.8%. That's quite a significant beat as well. It was expected about 3.4%. It's coming at 3.8%, and the monthly one is coming at 0.6%. And the core is coming at 0.7% of 1%. So the core is up the year on year at 3.8%, and the core number for the month 0.7 of 1% as well. So it has ticked up. It's ticked up more than the market was expected to tick up, but we'll see. Is that still within the range that the Fed aren't going to get too excited about, I would expect. But let's hang on a minute. What's happening here? Let's bring the charts up. There we go. Sorry about that. fiddling with things. And obviously, Miss Lagarde's press conference is kicking off as well as we speak. And the euro, as you can see here, has started to shift around a wee bit. So we're at 121.61. So a little bit of action. This is the 5-minute chart. We take it up to the hour chart. You see, we've really not been doing much all day until obviously the big news, really the big news of the week, to be honest, has come through. Let's have a look. I haven't seen that. That's not on that. And I'll just mute that and see where my questions come in. There we are. I've got my other site up. So, euro, not a great deal of action. I say the main thing was that the ECB weren't expected to do much. They didn't do anything. The statement is very high. I haven't had a chance to actually highlight the statement itself, but it's very quick scan, very few changes in there. Miss Lagarde sometimes can get pulled by questions in the press conference as well. She's a very adept speaker, an orator, and being a lawyer rather than a politician, rather than an economist, unlike Mr. Draghi. But Mr. Draghi's now a politician, I suppose. She's quite adept to say handling questions from the press. So I'll see how that pans out. If anything new comes of that, I'm not really expecting much on that. So 121.60, really. As I say, very slight move in euro dollar. Sterling's been in a bit of focus today. This is yesterday. We moved down quite significantly, and we went under 140 this morning. Lots of political shenanigans going on in the UK. Mr. Biden's put pressure, or suggesting he's going to put pressure on when he sees Prime Minister Johnson later today about the Northern Ireland Protocol and the pressure on the Northern Ireland Peace Agreement. So the UK Prime Minister very much host of the G7 summit this weekend. But first meeting with Mr. Biden is with Mr. Johnson one-on-one before the summit itself begins tomorrow officially. So again, that's perhaps pressured pound cable to the low side over the last 24 hours. Cable getting a bit of a lift here as the dollar props comes under pressure from that data that's come out. If you're just joining me, the data has been, the spike in inflation is higher than expected, and the initial claims are not as good as expected. So all in all, that's put a little bit of pressure on the dollars. You can see that this is the pound chart here recovering up. You see the euro going the opposite direction. In fact, the euro's going in the opposite direction. Why Miss Lagarde speaks. So it'll find some floor after the press conference is over. Dollar yen. Let's have a look at dollar yen here. Dollar's up against the yen here in the following the data 109.60. As you can see here, it's again another one very much range bound this week, waiting for this key data. The key data is out now, and the markets are absorbing it. Core inflation is running at 3.8%. Remember, target for the that's from the CPI. It's a technical way of measuring it, but remember the Fed are more interested in this PCE number, which is also spiked up on last reading. But this again, the fact that the headline has gone to 5%, that will you can see the journalists typing out the headlines now, can't you? US inflation 5%, big fat round number 5.00 from 4 point something. So it's going up. Yeah, people are aware of that. Their food's got more expensive. There's been this big rise in commodities. Timber's rocketed. Lots of houses, and the housing boom in the US is starting to not cool, but it's certainly feeling the pressure of supply simply because the timber is got so expensive. It's made the margins for developers and builders that much tighter, and therefore our people getting to want to pay these overinflated house prices, which this is what happened back in 2008, 2009, didn't we? The last big financial crash we had, and apparently there's nobody here. There's nobody asking me any questions, so something's perhaps technically wrong, or you're just all bored with me, perhaps. I don't know. But there we go. Big day today. Perhaps you're all watching Miss Lagarde. Anyway, let's just have a quick run through the other chart. So this is the dollar yen. Very much a sideways action. We got to the higher time frame for dollar yen. You can see that oscillation, basically supported by the 50-day moving average all of May. We haven't really tested it so far in June, but 110 remains the key line in the sand, and above that is about 110.20, where that green line sits there for the high for June to break through on an end of day basis. You see very quiet last few days ahead of this data today, following the big shock with the NFP missing by 190,000 on Friday. Aussie and Kiwi continue to remain in demand. But again, all the dollar crosses you see here just sideways, quickly run through that. So 1 hour on the Australian dollar, pivoting through 77.40 today. Kiwi, similar sort of sideways, a bit zoomed in. Let's zoom that out a bit. There you go. That's drifting a bit low. So Kiwi's under a little bit more pressure than the Australian dollar, but still edging to the downside. Swiss, again, not great. As everybody's been saying how quiet it is. It really is June. As you can see, this is a really good example, actually, guys. Look at this. Quiet. Let's zoom in. All week, nothing going on. A few busy hours here yesterday where we moved down, and that's the excitement of the numbers, and we still can't get back over 90. So again, the pressure remains to the downside. Right, some of you have. Right, okay, let's have a look. Right, can we buy now or am I late? Buy what, Matthew, my friend? I don't know what you mean. What's going on with the US 100? Man City fan. What's going on with the USA 100? Let's have a look at the USA 100. Well, the tech stocks, interestingly, came back into focus on Tuesday. I noticed on Tuesday's close, I don't know if any of you trade the individual stocks, but Apple, the world's biggest company, remember, moved back over its 20-day moving average on Tuesday and moved forward again yesterday, Wednesday. So tech stocks are back in the frame. Let me find my USA 100 post chart on here. Let's have a look where it is. Actually, let me open it. Andrea showed me a trick earlier. Let's see if it's going to work for me. It worked for Andrea, but she's young and clever, and I'm not. Oh, no, that was wrong. All right, she's telling me here what to do. There we go. There we are. There's a USA 100. There we go. It's on there. So USA 100. What's going on, Davis? Well, a bit like we just seen with the Forex markets. Lots of sideways action waiting for what's going on. But we've drifted lower today. And let me just put in the period separator so I get a feel for where I am. There we go. So we've drifted lower today ahead of the CPI number. And we've we spiked down into the key 200-hour moving average, but we've bounced off it aggressively as well. That trend, if we zoom up, that trend you can see nicely demonstrated here. So we went under the 20-day moving average, or the 20-hour moving average yesterday in the close here. And we've been in the under half of the second half, the underside of the lower half of the Bollinger Band into close yesterday and all of today. So we went sideways in the Asian session, then European session, we just ticked lower. We're now under the 50-hour moving average, and these are the green one is the 9, and the yellow one is the 5-period EMA. So that continues to move down. Tested the 200, bounced off it quite aggressively. The MACD signal line and the histogram are below the 0 line. You see they're still trending down here. Come along, Mr. My mouse doesn't want to work for some reason. There we go. So you can see here. Actually, you can't see that. I need to be on here, don't I? We've moved, the signal lines breached the 0 line. The MACD histograms are getting longer, so the trend moves down. This is obviously going to stall now as we're moving up, but this hour is still got 20 minutes to complete before we can make a decision on this. But looks like the tech stocks are turning around ahead of the US Open, which is still 50 minutes away, on the back of the weaker dollar. So if we go, just go to the dollar yen. Interesting mixed picture for the dollar. We've got cable bouncing here. We've got dollar up against the yen, sort of running out of steam a wee bit now. It's down against the euro. Euro's bounced up on perhaps what Mrs. Lagarde's saying at the moment. I can't say underlying price pressure remains subdued. Well, there's nothing too shocking there, although that was obviously a pre-prepared statement. 5%, is that subdued inflation? Well, it's not. Is it subdued? No, that's what central banks are sticking to. That's their mantra globally. They're sticking to it. So, excuse me, just going back to, I've lost my Where's my USA 100 chart gone? What did I do with it? It's disappeared. It's gone. There, the front. But as we can see, that as the dollar's mixed, but the Nasdaq has bounced a wee bit in this hour, but it still remains. Basically, Davis, it's still down. It's sort of closed off that, or it looks like it's closing off that short position, which would have initially triggered there yesterday around 10 o'clock last night. It went sideways in the Asian session, down in the European session, and it spiked as low as the 200 hours. So you've moved quite a significant range there. The ATR on this is about 26 points, 27 points there. So you've probably already moved quite a fair way there. You've gone short there at 13,813. You've been all the way down to 13,729, 7,030. So that's like 2 times your ATR quite comfortably hit there. And see if this is going to turn around and move up. Thank you for your question. You asked it twice. Okay, let's check for any Facebook questions. Can we buy now or buy now? Massive, well, I'm not sure what you're talking about. Sweaty's asking about on Facebook is what's the Aussie and what's my input on the Aussie. So let's have a look at that. So the Australian dollar we looked at earlier was very much sideways action. If we zoom in, actually let's zoom out first. Let's go to the daily time frame. So again, this is a daily time frame, tracking sideways and drifting lower this week. Let me zoom up a bit, and drifting lower this week. It's now turned around. So the Aussie's picked up today on the anticipation of the data a little bit. So we moved down here from 77.25. It's moved long. It's chopping around. It now looks as if it wants to move up. See what's happening with regard the Bollinger Bands. The Bollinger Bands are now starting to widen here in the last these hours. We've got obviously had the volatility of the data itself. So we spiked down initially to 77.15. We spiked up to 77.50. So it's a fairly big move for the Aussie dollar in this current hour. And we are tracking higher at the moment. But again, there's still 15 minutes for this hour candle to close. But if we go down a time frame to 30 minute, you can see that will be a bit more sort of biased to the upside. We go to the 15 minute, you see much more of the volatility as the data broke. So it's a bit more of a sideways action, isn't it, here on the 15 minute time frame? But it really wants to. It's sort of edging up generally, but there's no real momentum. So the highs have got higher. Then we've come back down, but we've got this big here on the 15-minute time frame. We've got this big congestion of the 50 period and the 200 period congestion there. So we've got key support there at 77.35 as we trade at 77.40. So, but on the 15-minute, it needs to break above that high there around about 77.44, where that last parabolic SAR was printed. So that's a relatively positive close to that 15-minute candle there, with still 15 minutes to the hour to go. So that's the Aussie time frame. Sweaty, I'm not sure what time frame you trade, but that's, I say, generally this is the daily. It's a bit of a sideways action here around the 77.40 on the daily time frame. The resistance on the daily time frame would be up here at the top of the Bollinger Band now, which has come down from the rest of the week to 77.96. Shut me up on that. And so 78 is obviously a key resistance, and we're still way below that, 77.40. So really sideways, not much of a trend there. Lower down the time frames, again, it's because of waiting for this key data, so it's not a great deal going on. But if we go down to the 5 minute, if you're scalping this, it's obviously been choppy because of the data. And again, it just doesn't seem to want to find a direction, really, even down here in these 5 minute time frames. So on the 5 minute, you've got support there at 77.35. We've got resistance at 77.45. 10 pip gap there on 5 minutes on the Aussie. Let me know what time frame it is, Sweaty, and we'll look at it a bit more detail. Please give me the summary of the ECB. Dovish or hawkish? Dovish, Peter. It's very much in line. It wasn't, but not as dovish as expected, because the statement hardly changed. Obviously, things can change while Miss Lagarde is speaking. It's unusual, but all she does, she reads out the statement and then takes questions from the press. And as I said at the beginning, she's very adept at handling the press. And so, Davis, that's not a problem. And see what happens. Obviously, she's talking as I'm talking here, so I can't make any assessment on that. I can see her on my Reuters terminal over there. They've increased inflation expectation to 1.9% from 1.5%, but that still seems a bit dull, doesn't it, compared to that 5% we've just seen on CPI at the United States. So, the United States coming out of the pandemic a bit more aggressively, significantly more aggressively, significantly more quickly than Europe. Although Europe now this morning, Ms von der Leyen announced that 50% of all European, or members of the EU, at least, not all Europeans, members of the EU have now received at least one vaccine. So it's not as good. The market, Peter, was really expecting a bit of a more dovish than it's come out. So it's not as dovish as expected. It's certainly not hawkish, but there we go. Instructor saying bullish or bearish on euro dollar. As we saw with the euro dollar, it's really trying to find its position. It's been drifting lower all day, and obviously we got the announcement and the volatility of the excuse sometimes for some market makers to play with the positions when the news comes out. The news is very much expected. So if anything, what Ms Lagarde might be saying, or is sort of pushing it a little bit higher. But really, here on the 1 hour chart, with this candle still not closed, still got 10 minutes to go, the resistance very clearly is there at the 200 hour at 121.79.6. And the support, as we've moved up, really, is round about that 20 hour moving average there at 121.71. So that's your range as we go forward post ECB and post Miss Lagarde. So see how that ticks out, instructor, my friend. Right, we've got some more questions here on YouTube. So what is the direction of gold? Gold has had an interesting week, and we continue to track lower. This is the 1 hour chart on the gold market. So here we went into the key 1875. Remember, 1875 is a big psychological, because it ends in a 5, and it's also a key technical support area on the end of day basis. We've been under that today, testing it. We're currently back $10 above that. We've bounced quite significantly. So again, gold bouncing against the dollar post the inflation date. You would expect that, given that gold is probably one of the most simple to understand hedges against inflation. So if inflation is going to prove more than transitory, you would expect perhaps gold to start moving up from here, as well as other commodities. Remember, all commodities, whatever you're trading, whether it's sugar, cocoa, cotton, gold, or whatever it is, are all priced in dollars. So if the dollar's weakening, the price of that asset the price of the asset you're looking at will tend to appreciate. So it's quite a significant bounce from the key daily support here at 1875 this morning for the gold market. If we drill down, you see the result. If you go down right down to the 5 minute here for gold, you see the reaction to gold, very positive from that inflation spike. So gold up here on the 5 minute, be up on the 15 minute as well. Yeah, big move here, up 30 minute triggered here. There we go. Still, that was complete or completing now. 10 minutes to go. Again, the 30 minute resistance sits there just above us at 18, just shy of 18.90 on the 30 minute chart, and the default 1 hour time frame, big candle, big engulfing candle of all of today. See how it's let me zoom that up for you. How it's engulfing all of today's action. So that dotted line there is the beginning of today, and we've just drifted lower, quite a leg lower there under the key Fibonacci level. We went back over the 50 Fibonacci. I'm not sure where that's from, but that's that. I can put it on the camera and put it on. That's why that 61.8 Fibonacci level comes from this weekly area here. I remember what that was, because I remember putting it on here myself. Oh, it wasn't. It's a daily one, wasn't it? It was this retrace here from the top we had into the end of May to the low we had in early June, and we've retraced that key level, and the 61.8 is the support area 1875 we talked about earlier, which we've managed to hold. So you see that top there, we come back down, and now we're moving back up. So big hour for gold. So gold traders are moving up in the right direction. I hope you're the right side of that gold trade, Jaleel, my friend. Michael, what is the direction of euro-dollar market? I just said that to who's asking about that? Somebody's asking about that on Facebook. Wizzy, it's not clear at the moment, but it's airing to the upside. This is the 1 hour time frame on euro-dollar. It dipped quite significantly here, but we're moving up here again. If you were trading this ahead of the big announcement, it would have triggered following this strategy. You would have been short yesterday into close, short. Then it started turning around. So you'd have closed your short out here at 2 o'clock. Then you would have gone long here at 3 o'clock, just ignoring all. If you could have traded with all the news, obviously. If you'd had a stop loss down here, you'd have been stopped out on the news. But wait till the news is gone. It's gone now. That's it. So it's airing to the upside. So it's moving higher. 121.85. Yesterday's high. Remember, we were up there at 122.15. So that immediately brings in the big psychological round 122.00. And if we take this back up to the daily time frame, you can see what our key resistance 122 itself has been. So 122 sits there, and we haven't really, as you can see here, this is 122 here, and we haven't closed over that on an end of day basis in June yet. So is there enough oomph from the ECB and from the inflation data and the jobs data, the unemployment claims, the weekly claims from the US to push this over 122 for today? Questionable. Will it be for tomorrow? Because tomorrow's the end of the week, it's the end of the second week of June. Maybe. We'll see. But it's certainly ticking up intraday, but as you can see on a daily basis, it's really boring. It's not doing anything. It's just tracking sideways, waiting for the big news. Big news has come out and nothing's happened. So let's see where the next break is. And as a trend following trader, it's still really going sideways all week. We've got key support at the 50-day moving average at 121.05, so 121 itself. And then, as we said before, we haven't been able to close over 122. So again, 100 pip range, sideways, consolidate. And remember, the longer something goes sideways and consolidates, the bigger the breakout can be. And going back a wee bit further, you could argue that this is what's happening up here, and indeed it is. We've trended higher here through April. We moved up in May, but we haven't moved above May's highs yet in June. So we're very much in that consolidation zone. So you euro dollar traders, you really want to watch this range here that we've had, say 121. 40 if you want to bring it up a bit tighter. 121.30 really was the close low for June and May there, and the high is that daily close there at 122.50. So that's your range for most of second half of May, or all of the second half of May, and so far for the first half of June. So we need to break out of that as a trend follower to see what's happening. But at the moment, you can trade the ranges, trade the oscillations. So there is little direction, to answer your question, Michael, on that higher time frame. Kumar, what is the silver buy or sell? Silver? That's an interesting. I haven't looked at silver for a while. So silver against the dollar, one would assume it's followed the gold market higher, and hey presto, there we go. But again, another good example. This is silver against the dollar on the 1 hour time frame. But again, very much channel bound this week. This is the 1 hour time frame. You've seen this all week, so this is the excuse. And again, this is what happens sometimes, my trading friends, is that the market waits and waits and waits. Let's put this on. And the players, the market makers. Oh, it's an offline chart for some reason. Why is it an offline chart? Okay. Offline chart. I don't want it to be an offline chart. I can't. Reset. Oh, it's broken. See, this is what happens with live broadcasts, ladies and gentlemen. Things break, and you can't do anything about it. And you've got to fill in with your chart broken. Okay. Sorry about that, Kumar. My assistant is sort of running around here. You can't see them, but they're very helpful. But we've broken. Right. So let's try and bring up another. No, everything's gone. Have we lost the internet? PC, my workstation seems to have frozen. Anyway, this is the chart is still correct, Kumar. I can still answer your question about silver. Silver, like gold, has benefited from this inflation data, particularly more than jobs data, to be honest. And we're up at 127.88. So next big line in the sand is around that 128. The future, if you look at the futures market, the comment for silver, it remains very well. But I think we fixed it. Thank you, my friend. This is silver. So we're at 127.88. A huge engulfing candle. When we come back to look at this when it's completed. It's got 3 minutes to complete, so it's taken out all of this previous action. See if I can put the no, it's still not. Why didn't I just leave it alone? It doesn't want to work. It doesn't want to work. But yeah, silver's bid, Kumar. Let me just try and run through some of your other questions. I can't put them on the screen, unfortunately. King Cyrus asks, seems like root consolidating and waiting for large. Absolutely, King Cyrus. I should have put your question up. I can't at the moment, but you're right, yes. Very much in a consolidation phase, and you've got to be patient. You can trade, obviously, as an intraday trader, that the silver chart we can see there is very, very clear with its top and its bottom. So you trade the oscillations, the top of the Bollinger Band or whatever oscillator you're using, stochastics, top to bottom. Obviously not going to catch all the move, but, as you can see pretty clearly on that chart, I hope you can see that. That's very much a range bound. So King Cyrus, you're right as well. Michael's asking, what's the direction of euro? We just talked about that. Dollar-CAD. Michael, Dollar-CAD. One would assume, I can't go at the charts because it's broken at the moment. Excuse me. But we'll bring it up. I would again assume, I can't see the charts. I can't see any, nothing on my other screens here telling me what's going on. But Dollar-CAD. That was silver, right? I think we finished with silver, didn't we? There we go. For Kumar, we were really going sideways, waiting for some action. That's pretty strong there on that 1 hour candle. So the next target, really, if you're taking this at the close of the hour, which is closing in a minute, would be yesterday's high, which would take you to 27.98 here. That spike yesterday. Is it going to run out of steam because we've rallied so hard? Well, it may do because it's a big, strong rally, but the support is very much there, that 200 hour there, Kumar, which is at 27.72, the midpoint of the Bollinger Band and the 200 hour. So that explains all that sideways action. But your next high is 127.98. Support is that 200 hour there for silver. Right, my charts are back. Cyrus, there we go. That was your question. Seems like root consolidating and waiting for a lot. Absolutely nailed it, my friend. I don't want to use technical terms like that. Where we are now, Michael, we looked at euro, didn't we, for you? We talked about the euro, and you're asking about Dollar-CAD, direction for Dollar-CAD. Well, again, let's have a look, see if the dollar is down against the Canadian dollar as well as it was against the others. Where's my Dollar-CAD? There's my Dollar-CAD. So yes, dollar weakening against the Canadian dollar, as you might expect. But there are signs of some life in this pair. It's been tracking lower for what seems like forever, Dollar-CAD. This is the daily time frame for Dollar-CAD. And the highs continue to get lower. The lows continue to get lower. And now we flattened out here. Again, see if this period separator is going to work this time. I don't want that one. I wanted that one, just so I can see where my day is. So we seem to find a floor here. But these were multi-year floors down here during May. And we've sort of rallied. There's signs of life. That's all I'm going to say at the moment. Signs of life of this support holding 120.30 on an end of day basis. So we ticked up over the 20-day moving average, still going sideways, still very much channel bound like everything else we've just been talking about. So let's just put the top of the channel on there. So there, Dollar-CAD channel there, 121.30, 120.30. So it's no coincidence, guys. It's no coincidence. We're in May and June, the doldrums of summer, as many say. And we got another 100 pip range for Dollar-CAD. Don't get sucked into everything's in a 100 pip range, because remember the average true range, the daily ranges of the different assets are different. So just because they look to be the same. They're not the same. Make sure you understand and look. Have your ATR. So, for instance, the ATR here, this chart, this indicator here, the average true range for dollar CAD is about 61 pips, but the range that it's trapped in at the moment appears to be about 100 pips from 120.30 to 121.30. So again, it needs to move to the higher side. So I don't know what time frame you're trading this, Michael, but today it's certainly down. The 4-hour triggered lower earlier today, couldn't get above that. There you see. So that would have been a 4-hour trader would have taken that short there at just now. In fact, 4 o'clock. And the 1-hour trader, if he was trading it, would have triggered short here at 1 o'clock. But again, because of the volatility of the news, you'd have probably been, if you've been, well, actually, you might not have. You've probably have had your stop up here. It would have been spiked out, actually. But that continues to move to the downside. So today we're under the 200-hour moving average for dollar CAD. Yesterday's low on the following the inventories, which was a big drawdown, but so that was positive for us. That's why we went down. But we immediately recovered simply because there was a big build for gasoline. So the suggestion that lots of petrol stations were trying to distill the crude to petroleum has perhaps been dissipated. So the big driving season, which we're just starting now in the US, the big holiday summer driving season, which lots of people didn't participate in last year, lots of expected pent-up demand may or may not come to fruition, but the data was a bit mixed. So that's why it was positive and negative at the same time. So dollar CAD dipped all the way here yesterday to 120.56. We rallied we closed towards the highs yesterday at 121.26, and then today we've moved back down. So whether we will test the lows of yesterday is a bit questionable because that was a key inventory data. The low from Tuesday was there, and we're testing that. We've tested that in this hour, so that low is probably your next level. 120.70. So 120.70 is the next level to the downside for dollar CAD. Now that we're under the 200-hour moving average, no more data today. The big data. Let me just review. The big data was the inflation data from the US, the consumer price inflation, the core number, the key core number. Year on year for May was 3.8%. The core number for May itself was 0.7 of 1%. Expectations were only 0.4 of 1%, so it's much bigger than expected. The year-on-year figure was expected to come in around about 3.4%. It's coming in at 3.5%. And the big headline figure, which you'll see on all your newspapers and all the news stories, is the 5% headline for year-on-year for the May number for US consumer price inflation. Okay, the Fed will probably shake this off because the Fed prefer the CPE number. The CPE number did spike up last time, but it's within their transitory story about inflation. So the Fed are remaining very cool, very dovish. There's no more noise from the Fed until next Wednesday when they meet Tuesday, Wednesday next week. So there's no Fed speaks until there's a news blackout until then. So all eyes are very much now on the Fed this time next week. So it was ADP last Thursday. It was NFP on Friday. It was all about CPI today, Wednesday, and now a week. And the third week of June is all about the Fed this time next week. So there we go. Dollar CAD, Michael, continues to move lower. That Tuesday low there, 120.70, being tested as we speak. Where was I? Michael, another one. Yeah, if you don't ask, you don't get, Michael. I don't blame you. You know, lots of people don't come on and don't say anything. So Aussie-CAD, Aussie New Zealand. Again, I'm not sure I've got that here, but let's do Andrea's trick of pointing that up. No, what do I want? I want this one. No, I don't. I don't want that one. I don't want that one. Oh, dear me, this workstation. I don't want that. I want that. No, I don't. It's not working. Why is it not working? Market Watch isn't working. Oh dear. File. Let's do a new chart. Do it this way around. Let's do it this way. Forex. Aussie Aussie New Zealand, you said, didn't you? Aussie New Zealand template. Let's do this one. Oh, so okay. So Aussie New Zealand ticking higher. Again, a bit of consolidation last couple of days at the top here at 107.77. That's our top there, certainly through there. Come on, Mr. Line. This workstation's not working right. So 107. 77 is the top, and we're sort of testing the floor of that on this 1 hour chart at the moment. So that was the floor from yesterday and earlier today, 107.62, and we're trading at 107.64. So it's airing to the downside. It's not really trending because we're going south. Look at the moving average there, looping up, but certainly spiked higher. That's a unfulfilled spike higher this morning, and now we've tracked lower. That would have taken you short there, very sort of weak short because it was still within the confines of that big up candle here from earlier today. If I put in the properties, the separators, you can see from earlier to today, we bounced into that low from the close yesterday, tested it again this morning, and now we're testing it again now. So we're either going to bounce off this and move back higher. Nobody knows at the moment, but the trend is certainly to the downside. We've got support here, this 107.65. We may bounce off here. That's what it may look like. But then we need to, if we're going to move higher, we need the resistance is immediately at the 5 and the 9 confluence there at 107.67, and then the 20 hour there at 107.70 to the upside. So if you there's your sort of channel today. If that's the 1 hour time frame, you go down to like the 5 minute, you can see you might have back there. We under it. You're looking for that would have got you in, but then we've gone lower. So that's 5 minute. That's taking you higher here. 5 to 4, you would have gone long, and it's actually broken into the top half of that Bollinger Band on the 5 minute 5 minutes ago as well. So that's another entry there, and you know it's looking to test that 50 period 5 minute, and then the 200 periods there, mate. These entries would have perhaps taken some profit there. That 200 period on the 5 minute chart there, 107.68, but above that, and we start to move up in the high time frame. So sideways, Michael, to answer your question on the daily time frame, Kiwi or Aussie Kiwi continues to bounce for June, so it's tracking high. So again, end of day trade is very calm. Went long, or would have gone long. Actually, not only just recently, really. Tuesday was the big one. First heads up was Monday, Friday, Monday, Tuesday, the big entry. Followed through yesterday, and we're into this channel now. So up, and that's the daily resistance above our channel we put on there at 107.90. So 108 then comes into play again for Kiwi on the higher time frame. That's Aussie Kiwi Lysander. Sorry, I'm a bit late behind all these questions, guys. Lysander, maybe a 50% retracement for all the dollar pairs on a drop coming after the hour goes. Maybe. Let's have a look. The hour has closed. 10 minutes into it now. Euro hour. Let's have a look. Yeah, Euro's ticking up. It's sort of run out of steam. Mrs. Lagarde is still, like me, still prattling on. What's she saying now? PEP, that's the key thing, the PEP, the extra funding, the extra QE the ECB put together. And she's talking about economic outlook still uncertain. There's nothing changed there. Inflation still not to worry about. Nothing's changed there either. So yeah, we'll see. But trending higher, perhaps run out of steam as we've gone through the 200 hour there. 121.85 seems to be our bit of a resistance at the moment, and cooling currently. Euro. Michael, another one. Michael's asking Kiwi-CAD. I definitely haven't got Kiwi-CAD here, but so let's find it. New chart, because that didn't clever work, didn't work. Kiwi-CAD, Kiwi Swiss, Kiwi was Kiwi-CAD, Kiwi-CAD. New Zealand. There we are. Template. So, Kiwi against the CAD. Again, another one as we've seen we saw it all week, really sideways action. The hourly chart here is capped by the 200-hour moving average up there at 87.128, so 87.13. Again, really not a lot going on there, Mike. I don't know how you're trading this one, but very much sideways action today. It looks like definitely capped by that 50-hour moving average, which is obviously below the 200-hour move. So major resistance up there at 87.13. Top of the Bollinger Band today sits at 87.07. And the resistance on an end of hour basis, that 50-hour moving average is completely flat, sits at 87 itself. So the big fat 87.00 is our key resistance, as you might expect. Round numbers being very significant, remember. So 8.87 for Kiwi-CAD. And we're moving down under that, having tested it 1, 2, 3, 4, 5, 6 hours today. We're over it intra-hour, if you like, intra-candle, last 2 hours, 3 hours, 4 hours. But we're now starting to move lower. We're trade at 86.70. Is that 86? I can't read that. 86.96. So it's really not moving very far. The end of hour close, very tight one. So be careful on this. Watch the spreads on this one. 86.94. Or 86.93, the hourly close today. We've been lower than that today, but that's the sport. So another one really going sideways. Can't get too excited about that one, Michael, my friend. There's not a lot going on there. Any inflation news? The wise ninja. I don't know why you put that question on, my friend, but yes, the CPI knocked it out of the park. I don't know if you're still here. 5% was the headline, but the core 3.8%, both bigger than expected. That will add to the worry about inflation getting ahead of itself. That there is some real inflation. The Labour economists saying, well, there's still lots of slack in the labour market, as demonstrated by the NFP miss on Friday. Others are saying, well, it's parts of the jobs market is very hot. Earnings have gone up in certain significant parts of the market. So there's this, as ever, there's this continuing discussion and mix, and what do? You pay the ferryman, or whatever the phrase is. You make your decision accordingly. But as far as the trend following trade is concerned, for the Forex market this week, it's been very much sideways action after that big NFP number on Friday, because lost the volatility. We expect a bit more volatility given the CPI hasn't followed through yet. But it's Thursday, Friday's the end of the week. Let's see where we go. But as if you're a Kiwi-CAD trader, you should be an oscillator trader. It's just going sideways. Kovacs, please wait. What is the direction of the dollar? Well, dollar index, which should be here. I'm sure it is here. The dollar index itself. Let's find it somewhere. Dollar index itself is stuck, really pivoting through this 90 level. We're at 90.12 at the moment. Let's put that. Let's put this same template on we've been talking about all day. And here we are. We're at 90.12 now, so we've bounced a wee bit. But really, again, another great example of there isn't one, basically. So this is going back to June the 4th last week, June the 3rd. We've really been pivoting right through 90 itself. That's where the 200-hour moving average is there. If we go up to the daily time frame, you can see the trend remains pressured to the downside. We had this big spike up on Thursday last week ahead of NFP. We recoiled from testing the 90.50 level, and then we're back to 90 basically for the rest of the week. So there isn't really any direction with the dollar. We're waiting for some breakout as well. Again, you could argue that's a bit of a floor there at 89.65. We've got a top of the channel there at 90.50. So a relatively wide channel, but again going sideways, waiting to break out one side or the other. We'll see how equity markets are. Miss Lagarde is still talking, so she's well over. Actually, it's 45 minutes, so that's not unusual. So we're getting lots of questions. Countries should use these funding's productivity. Remember, the EU agreed a huge budget for the recovery fund, as they've called it. All countries in the EU receiving funds from that. and continue to go. Michael, you're very interesting, my friend. Are you still here? I don't know if you're still here. Let's see if there's any more questions on Facebook. No more questions on Facebook, which is a bit of a unusual, or is it a shame? Sort of. Let's reload the Facebook. So Michael was asking about. I need myself one. I have to. Right. All right. Some more questions again. I was down. Let me just go back to the Facebook questions, Michael. I'll come back to you. You've had a lot of your pairs, but we will come back to CAD yen. Isaac's asking here on Facebook. I was down at a point until I was introduced to him. Oh, hang on. You're talking about somebody else. You're obviously talking about some broker. Best global Indonesia. Help for us. Don't you feel gold is too overrated and it's better to invest in crypto? Varun said. Gold has a tangible asset and a tangible feel, Varun, my friend. It's real. It's traded. Yes, it's obviously priced in dollars, so you could argue about that. But obviously, cryptos are something here. Manik's asking about the Nasdaq. We looked at the Nasdaq earlier in the USA 30. Let's have a look at the USA 30. We haven't looked at that one yet today. USA 30 here. This is the weekly chart, so you can see if you're a long-term investor in the American stock markets, you're quite comfortable. You're quite happy. It's trekking higher. This is the 20-week moving average all the way down here. So again, the higher time frames remain very well bid. The 50-week moving average, i.e. the yearly average, if you like, 50 weeks, more or less a year, is all the way down there at 30,875. So we're all the way up here at 34,560. What am I talking about? 34,595. I can't read my own handwriting there. 35,000 very much in focus. But let's bring it back to today and this week. This is the 1 hour time frame for the USA 30. Let me put the I have to get these workstations set up properly before we come on. So we've been drifting a bit lower today, Thursday, before we've spiked up into the open. We're 12 minutes away from the cash open. Remember, this is the CFD of the futures chart. So we drifted lower yesterday into close. We went sideways on Tuesday, and we drifted down on Monday from a relatively strong close on Friday following NFP. This is the industrials. These are the companies that have benefited significantly from the churn out of the tech stocks, out of the USA 100, into the industrials, into the cyclicals, the financials, the utility type companies, the ones that give good dividends, the value companies rather than the growth stock companies, been drifting lower. But we've had a big uptick in those. Obviously, there's all the story as well that's underpinning these is the infrastructure budget talks. Between the Democrats, the president, and the Republicans, the bipartisan deal they're trying to put together, trillion and a half, a few million if the Republicans had their way, but we'll see what comes of it. If not, the Democrats are going to push it through by the looks of things. But there seems to be some sort of progress but it's all politics that went in the bipartisan talks. Yesterday was the last story, which was positive given that the president's out of the country. So Anyway, we'll see. So your question was, Manuk, about the USA 30. Well, it's drifted lower. It would have triggered higher here on this particular strategy here this afternoon at 2 o'clock. Your stop loss really would have been a big one down there. You might the low below those. It's a difficult one given all this data coming out. It's a difficult one to trade, but really there you might have been taken out there. But certainly the hour here. If you'd got in at 4 o'clock, that's certainly triggering higher here at 34,589. If you've been lucky, you might still be in there at 34,522 from this sideways action. But a big engulfing candle again, positive candle. Size of the candle matters, remember, guys. Body of the candle matters. We're over the 20-day or 20-hour, we're over the 50-hour, we're over the 200-hour. So we're with the trend. We're at the top of the Bollinger Band. So you'd expect a bit of retrace. But we're still down for the week, aren't we? So we've got a bit of action to catch up. So yesterday's high is the next target, 34,656. That's also Tuesday's high. And we go back to Monday, we were at 34,835 to the upside. The low for the week, interestingly, was put in earlier today at 34,400 is the low for the day. So it's bidding to the upside, Manu. And we did look at USA 100 earlier, but I don't know where it's gone now. It was on here somewhere. USA 100, what was it gone? We had to close it because it freaked out, didn't it? But again, that's been weak, the USA 100, but it benefited. I think Andrew, we have to restart. Oh, there it is. It's benefited like all the equity markets have from the weak dollar because of the inflation spike. So again, another one being drifting lower all day. We were short here into close yesterday, drifted lower today. Over 2 times the ATR on the 1 hour trade, so some nice 50 points profit on that. And then that has gone long now. That's gone long now on this big engulfing candle here on the data. MACD remains below zero line, as you can see here. I hope you can see here just above my head. But you see the histogram shorter, the signal line is now starting to turn up with this big tick up. But next break, if we break back over the zero line, we'll be positive. High from yesterday was 13,900, and the high from Tuesday was 13,915. So that's our support now, that 13,815. So positive on there, Manu, my friend. And that's all the questions from Facebook. So let's come back to Michael's CAD yen. Did we do CAD yen, Michael? I can't remember. I don't think we did we? Or did we? No, we didn't. No, I don't remember talking about CAD yen. So where are we? I've been here nearly an hour. My voice is going a wee bit. Just excuse me a minute. I'm going to have to have a drink of cold coffee. Vicky, I'll get to you. Don't worry. It was 5 minutes ago. Don't worry about being late. We'll get to all your questions. Don't worry. If you're happy to stay, I'm happy to. I'll stay here till the questions dry up, basically. And Michael's asked loads of questions. So this is about his 4th ask. So don't be afraid to ask. You never get unless you ask in lots of ways, lots of parts of life. Right, where are we doing? We need CAD yen. I'll need to find the chart because it's not on this new workstation. We had a technical hitch before, so apologies, ladies and gentlemen. CAD yen, there we go. So there we go. That's a 1 hour. You can see that's ticking up, isn't it? That's April, May, and again another one that sort of ran out sideways. But we can see we're at 90, 70. So that's like pretty spiky in the last hour. Let me put a template on. That we're using, we can see today. So again, another huge spike there. Michael, I guess that's why you're asking about these. So yen's weak and dollar's weak, and clearly here again another sideways action. That's really that's a good enough signal. That's huge candle. There, a bit of a panic perhaps entering all the way after this, but it's taken out all of this action earlier in the week. From the sideways action, waiting for US inflation. See how although obviously the Canadian dollar and the Japanese yen are not directly affected by inflation in the United States. Look how it's reacted from that data. It's got nothing to do with other data. It's got nothing to do really with other data in Japan, unless there's something really surprising come out of Japan or Canada in the last hour, which I don't know about. But look at that. This is a great example of why candlesticks and why technical analysis can be so effective. You just got to wait your time here. Again, you were under the 200-hour moving average all week here. This is Thursday, Wednesday, Tuesday, Monday, down on Friday, sideways all week, oscillating down to the bottom, up to the top, down to the bottom, up to the top, down to the bottom. News has finally broke the news of the week, and bang, we're back up. Okay, so where are we going to go from here? Well, obviously, we've taken out all of the week's action, Monday, Tuesday, Wednesday, Thursday. Obviously, Thursday isn't over yet. We can't decide on that. But from an hour's point of view, that's a strong candle. And we'd look back to next week. So if we zoom this in a wee bit, there we go. We can see that's our top of the channel this week, hasn't it? Through there, 90.64. We've spiked that in this last hour, and we're up and above. We're at a week high now. We go all the way back. So this is Thursday, Wednesday, Tuesday, Monday. Friday was the big decline. So where were we on Friday? Well, Friday's 200 hour was round about 200-hour moving average, remember, on Friday's close was around about here, wasn't it? And let's see where we stalled. This is why, people say technical analysis is made up and it's magic, but, see where we are. That's exactly where we are now. We're 90.70. That's where the rally stalled on Friday's close, given that all of this week's action has just been waiting to happen. So nothing's been happening. They've been trying to get you to go long, trying to get you to go short, trying to get you to go long, trying to get you to go short, and nothing's happened. There's been sellers here, there's been buyers here, sellers here, buyers here, sellers, buyers, and now we've broken out. Is the breakout going to hold? Well, we don't really know, but it's looking okay. We're back now into this. So this key level here, where we are now, the top of the channel, 90.64. Let's bring it into today. 90.64 is absolutely 90.64 is absolutely key. If we close above it, it's strong. If we close back under it, we could end up drifting back to the bottom of the channel. But that's the way to trade it. Use appropriate indicators. But support going forward now is that 90.64, and now we've got 90.58 as well. So key little zone for CAD yen traders intraday, Michael. And I'm going to ask somebody else now, Michael, because you've had lots of attention. I'll come back to Swiss yen in a minute. Damien is asking about mind your business. Oh, okay. Silver squeeze. Well, maybe silver. I guess you're a silver trader with a handle like that. Sky lever. Silver, big old bounce like we've seen. It's all to do with the weaker dollar on the inflation. But, it could be, again, market participants messing you about on the data. But we're sideways. So big candle following the inflation. We've come back to that 200-hour moving average. And that's the key anchor for the week. Again, we're back to there now, 27. And again, now that's our support now. Key support. We probably, I might end up eating my words, but we're probably not going to go lower than the current low of the week, which was tested as the data was coming out at 27.45. The end of our close and low of the week is a bit high, is significantly higher than that at 27.57. And that's our support now for silver traders at 27.70. See where we go from there. Next target high, which we didn't get to, was yesterday's high at 27.97 in the rally. So see where we go. Maybe short squeeze. But if we look at the daily time frame for silver, you see this consolidation still, sideways action. So on the daily time frame, we can't get above 128.20. That's that. 28.20 or 28.15. Really, it's a few pips lower. For the close of the day for May. We haven't been able to get over that. But equally, like we've been saying on lots of assets, a lot of consolidation given the time of the year more than anything as well, around 27.35. So that's our range for silver traders on an end-of-day basis. And they're the two big lines you want to be looking at if you're trading this intraday silver. But yeah, it's really hanging right on that 20-day move now. So it's trendless, if you like, on the higher time frame. There's not a lot going on. Eric, what happens to Euro USD? Euro USD, Eric, let's go back to it. We did talk about it earlier, but it's the key currency. Where's Euro USD? The Euro got bid, and now it's turned around. Perhaps Miss Lagarde said something right at the end of her speech. I don't think she has. But the market was expecting more dovishness from the ECB. That didn't happen. Perhaps the market is now shrugging off the inflation data, but certainly we've turned around quite significantly from this test of 121 or 122. It's rejected 122. If we just put the 122 level in there. So we tested 120. Oh, it's not going to go. That's an old. Sorry, I thought it was an empty file. So that's at 121.96. So you get my point. It's more or less 122. We didn't get there in the rally up, and we've turned around and now moved lower again. So that support didn't hold or hasn't held for this hour. This is an hourly candle, remember. So it's not complete, but we're certainly significantly under that 200 and below, now forming new lows of the day. So the euro's being hit perhaps by something that Ms. Lagarde has said or not said in a press conference where I've been speaking here as well. So I haven't actually seen that. Fiscal measures should be temporary, she said. So there probably will be, but how temporary and transitory is inflation? How temporary are the fiscal measures, but the monetary measures is what she's in charge with. But 121.45, so the market is taking that a bit of a negative hit as the US markets open. So US cash markets are opening. Vicky, don't worry about being late, Vicky. Gold review. Gold rallied initially quite very significantly from this move down to a key support level at 1875. Key support level 1875. It's a big round psychological number. It's a key technical support level, that 61.8 fib level. We rallied to 1890, being a key resistance area, 1890, and we've staggered down from that since. So we're now back down $5 off, 50 pips, 500 pips to say 1885. So here on this 1 hour time frame, that next resistance is that Fibonacci level there at 1892. Big fat resist support at 1875, and the next resistance to this move down that we're in at the moment at 1885, and we're just a few cents above that at the moment. So will 1885 hold for the rest of the day? And then below that is the 50 fib at 1879.45. So generally well bid. If we got the higher time frames, again another one. Same old story. We're consolidating at highs, which is generally quite positive. It is June. June can be quite negative, ironically, and July. Remember, we're coming into the end of the second quarter, the end of the first half of the year as well. So 1904 is the first resistance, 1925 the next resistance, 1875 is the big daily support resistance, and the 20-day moving average sits at 1885 for gold. So again, gold consolidating on the higher time frame. Silver, we've talked about when silver crossed 30 for 50. When will the silver cross 30 for 50? Well, my friend, that's a long, long way away. Silver daily, silver really just consolidating here. We need to 30s. I'm saying it's a long, long way away. It's not that far away at all, is it? But is this rally higher here that we've seen from the lows down here at $24 at the end of March? So we were up April, up May, consolidating the end of May and all of June. So we need to break out of this range. That's the range. Who knows, Silver? Just keep watching. Patience is a great trait for all great traders. Ask anybody who's been in this business any length of time, and patience is a key asset. Size of the candle matters, guys. Oh, yeah, it certainly does, my friend. What chart are we looking at on the large candle? I'm not quite sure what you're talking about, Wise Ninja, my friend. And what chart? This is the current one on here. This is the silver on the daily. Keep watching, and we change time frames. We default to the daily. Gold will down or up. Well, study point gold again depends on your. It's all about time frames, guys. I've just said the gold chart, like the silver chart we've just seen, is consolidating on the daily time frame. We have support at 1875. We have resistance at 1905 on the daily time frame. They're your resistances as far as gold's concerned. Intraday, it's had a strong candle here in this last hour based on the weakness of the inflation. The spiky up in the inflation. But remember, the central bankers continue to talk down inflation. It's only going to be transitory. Perhaps Miss Lagarde did emphasize something about inflation. Obviously, she's only responsible for the European area, but she may have touched on, wider inflation in the global economy. Obviously, a knee-jerk reaction, you could argue, for gold in that hour after the strong inflation data. But intraday, I say we need to break over 1895, and the big daily support sits there at 1875. We're currently trading at 1880, so it's biased to the upside on that 1 hour time frame study point, my friend. Any more questions? Can we buy again? Depending on how long you're holding it for. Study point, my friend. As you can see here, if I zoom this up a bit. Actually, it zooms up a bit. That's got a lot of lines on here. Sorry about that. It's trending lower, but it suddenly ended very aggressively on the data, as you might expect. So the resistance you want to close. This is going to go higher. You'd want this to close above this 200 hour. If you'd gone long here on this big candle, you're still in it because your stop loss should be all the way down there at the daily stop loss. But it's a huge stop loss given the daily move. So you would expect a bit of a retrace on this candle in this hour, given we had such a big uptick in the last hour. If we go down, say, to your 15-minute time frame, that'll be a bit less. There's your entry. There's your big entry candle here at 1885.61. The ATR is not on this chart. It is. The ATR on this particular chart at that time would have taken you to 3.2, so $6 would have taken you to 2 times the ATR, so 91, which you would have got you would have got 2 times your ATR. So you'd have been in and out of that. That's probably what's happened there. It's rallied it's rallied very aggressively to a key 2 times the ATR on the 15-minute chart. It's then rallied in. It's then hit that technical level at 23.6 on the fib chart, and then it's bounced back down under that and under the 200 period moving average for the 15-minute time frame. So profit taken there, out, and now it's starting to edge back up. So 15 minutes still to the upside study point. But if you don't tell me what time frame you're trading, we can't really see or evaluate. But 15-minute remains bid. Hour is still bid to the upside. Daily remains sideways, so there's no real trend on the daily time frame. But we're still, we're testing the 20-day moving average, which we did last week and earlier in the week when we fell down and tested it, went as low as 18.55, a whole $20 below the key end of day support at 18.75. So that was a significant week last week. We had much more volatility than we've had this week. We've tried to test lower today, 18.75, but we've bounced off it. So see where the week closes tomorrow for gold. But gold sideways, relatively bid on the intraday timeframes based on the weak inflation or the strong inflation out of the United States earlier. So it looks like the questions have dried up. So let me go back. I don't know if Michael is still here. Michael, are you still here? He might have disappeared. I don't blame you. But I'm assuming you are. You asked the question, Swiss yen. So if you want to watch this recording later, please do. If you're not still here, and we'll have a look at Swiss yen for you. I definitely haven't got that down here. I'm pretty sure I haven't got that. But let's have a look. New chart, Forex, Swiss yen. The Swiss yen gone. Let's see if I can try it. No, it's not working, is it? Market watch isn't working either. Swiss yen, let's try it. I can't see it on this workstation. Michael, I'll drop you an email. Send me an email, webinars@forex.com. I'll try and find you if you're a client of ours, and I will find if you are interested, and I'll send you a Swiss yen analysis. So there we go. I can't find it here on this workstation. Wise Ninja, what a great handle. When will the next live be so I can get some questions ready? Wise Ninja, you can ask now, my friend. The next session will be live tomorrow at 2:30 server times with Andrea tomorrow for the weekly wrap. Obviously, this has been the main data today for the week, how the market absorbs all this data, and then on an end-of-day basis will be determined, obviously, when the market's closed tonight, and how it absorbs it on the end of the week will be apparent over the weekend. So Wise Ninja, great handle, my friend. Is that a Mandalorian you can see there? No, it's a ninja, isn't it? A little ninja handle there. So yes, we do these live sessions at least twice a week, usually at the moment we're sort of focusing on the jobs really. So the weekly claims on a Thursday is a key data, and I haven't really talked about that much today, but it came in worse than expected It came in at 376,000 compared to the expectations of 370,000, but it was down from last week, which it was expected to be. So it's still a new pandemic era low, 375,000, but it's still 150,000 above the normal range. The normal range in the normal economic cycle is about 200, 225, 250,000 on the new weekly claims. The issue with the claims numbers is that the continuing claims remains quite high. The weekly average is down to 400,000. That's coming down quite nicely, but the long-term unemployed has remained quite sticky. So it's positive, but it starts so the trend starts to slow down because we missed at 370,000. So that's normally Thursday, Friday. I'm not quite sure what we're doing next week, but Ninja. Wise Ninja, my friend, keep it. That is a good name. You're saying it's not a good name. That is a good name. All of the good names are already taken. Well, Wise Ninja's quite cool. I quite like that. It might be my age. I don't know. Sydney, I'm not sure if you have covered NAS yet. We have, Sydney, but my voice is about to go. I've been here an hour and 15 minutes, but let's finish with the NASDAQ. Not everybody's favorite, but a favorite trading index. Remember, it's the technology stocks, the 100 biggest technology stocks in the United States. Quoted on the NASDAQ. The cash market has just gone live. This is let's start with the daily high time frames. Let's zoom in a bit. So this is the daily time frame for the NASDAQ. Let me just take that red line off because that's confusing me if it isn't confusing that vertical line. Let's delete that. There we go. So NASDAQ being a bit choppy. If we zoom this in, you can see this takes us back to last year, up and then down here in March. Then we rallied to our highs here at the end of April. So our all-time highs, which we seem to be plotting every single day during April, took us all the way up here over 14,000. We then retraced quite significantly during May as the story about the churn out of the tech stocks became apparent, and the S&P 500 and the Dow started to rally. But as you can see here, if we zoom this in a wee bit, as you can see here, this is our top at 14,000. You see the very distinct trend line here from these lows in the beginning of May is holding. So we've got what we have forming here is quite a positive setup. We've got a flat top triangle, a rising wedge, or a flat top. So we're looking to break so big lines in the sand at 14,000. It's a big, fat, round psychological number as well, 14,000, isn't it, guys? And we're currently just 100 points away from it, 13,900. So as you can see here, we are currently trading. It's bullish. We're bullish. We're currently trading. We're above Wednesdays and Tuesdays high. We're a May high here, 28-day. Sorry, a June and May high as we trade at 13,900. So tech stocks got a bit of a rally yesterday. As I said right at the top of the shop, or earlier on in this broadcast, the key for me, the biggest company in the world is Apple. Apple moved back over its 20-day moving average on an end-of-day basis on Tuesday. Had a stronger day yesterday, but it's back over its 20-day moving average. So best day in 10 for Apple, which had been under quite a bit of pressure. So that there is people buying the value in the tech stocks as they've been sold off quite aggressively. Anyway, which is what's happened here, basically, and that's what's been going on since the middle of May as tech has started to come back. So 14,000 is your big line in the sand, Sydney. Here for June, we're up. We got support by this daily trend line. We've got the 50-day moving average here and the 20-day moving average here. We've got the 20-day moving above from below the 50-day. That's a positive sign. That's happened this week. So 13,925 we trade at the moment. 14,000 is the next line in the sand, and then 14,050 for a new closing all-time high. Strong candle so far today, and it'd be a bit more bullish on the lower time frame. So the 4-hour time frame was bullish from yesterday over that 20 period all day today, and then a big strong candle at the moment. And the 1-hour time frame drifted lower today, but then triggered positively, having tested the 200. This red line here is the 200-hour moving average. Tested that before the inflation, or during as the inflation broke, but that would have been your entry there at 4 o'clock at 13,826, and we're already at nearly 110 points to the good this hour. So a strong start for the cash markets, for the US equity markets for Thursday, the 10th of June, following the week or the big spike or the better than expected spike in inflation. Let me just finish by recapping the headlines from today. The big headline that most market participants will be looking at today is the consumer price inflation, the CPI year-on-year number for to year to May is coming at 5% compared to expectations of 4.7% and 4.2% in April. The more important core number, where we take out food and energy and much more volatile numbers, is up and beating expectations. Also, it came in at 3.8% compared to 3.4% and only 3% last month. So again, it's beat expectations. And the monthly number is stronger again for May. The monthly numbers are 0.7 of 1% and 0.6 of 1% for the headline. The core is stronger than the headline, so that's even more significant. So a strong April, strongish March, strong April, and a strong May for inflation. So the story is inflation only going to be transitory? Yes, says the central banks. The market data is suggesting perhaps it's a bit more stronger than that, but it's only 1 month. It's only a few months. The general trend has been to the downside. So that's all for now. My voice is going. Take care, everyone. May the trend be with you. May the pips be with you. And always watch that risk. Risk management is absolutely key. So take care, everyone. We'll see you all again next time. John Andrew tomorrow, 14:30 server time. That's 11:30 GMT for a weekly wrap. Take care, everyone. All the best. Bye-bye.